Welcome to this explainer. Okay, today we are going to completely challenge the traditional view of investing. You know, we spend countless hours obsessing over our 401ks, trying to optimize our brokerage accounts, endlessly tweaking our stock allocations, but what if we're completely ignoring the single most critical asset allocation of all? We pour so much energy into protecting our cash, yet we somehow neglect our absolute ultimate wealth-building tool. So today, we're going to explore how to allocate your most valuable resources to build true, lasting, and frankly untouchable wealth.
We have to start with this brilliant quote from the legendary Charlie Munger. The first rule of compounding is never interrupted unnecessarily. Now, usually we think about this strictly in terms of money, right? Compound interest. We think about letting our dividend stocks drip and just letting those index funds grow undisturbed over decades. But today, we're taking this absolute golden rule of financial compounding and applying it directly to the ultimate asset class, one that most of us interrupt constantly without even realizing it. So here's our roadmap for today's explainer. First, we'll hit the financial complexity trap, then the ultimate asset class, move into the math of compounding, and wrap up with the 3 pillars of growth. Let's just dive right in.
Section 1. The financial complexity trap. Why we absolutely need to avoid overcomplicating things.
Let's take a look at a really costly trap that so many investors fall into when they're trying to build long-term wealth. Imagine 2 totally different types of investors. On one side, you've got the portfolio collector. This is the person with a chaotic, stress-inducing portfolio. You know the type. They hold a standard all-in-one fund, but then they get anxious, so they tack on an S&P 500 fund, maybe a dividend fund, and oh, let's throw in a speculative tech fund too. Because of all this constant decision-making and tinkering, they end up with overlapping assets, way higher blended fees, and they honestly often just pause their contributions out of sheer confusion. On the flip side, we have the simplicity seeker. They hold a single, low-fee, fully automated global index fund, something that already holds over 9,000 global stocks. They log in, spend exactly 5 minutes a month, and they're done. It's a completely different mindset.
The reason this complexity is so incredibly dangerous almost always boils down to FOMO, the fear of missing out, or this totally false belief that complex inherently means better. But these common portfolio mistakes completely derail wealth. Adding redundant international ETFs, chasing last year's hot performance, or overcomplicating things with 10 or more holdings doesn't actually protect you. Take this for example. Adding an S&P 500 fund to a broad global fund is not diversification. Actually, scratch that. It's literally just duplication masquerading as diversification. You're forcing yourself to pay multiple management fees to own the exact same underlying companies like Apple and Microsoft twice. You are literally paying more for the privilege of creating a massive headache for yourself.
So what is the ultimate cost of all this unnecessary complexity? Try $90,000. Yeah, when you run the math on an everyday investor contributing just $500 a month over 30 years, the portfolio collector, the one paying higher fees for overlapping funds and constantly pausing contributions to try and perfectly time the market, can lose a staggering $90,000 in lost returns compared to the simplicity seeker. That is years of retirement completely wiped out. Complexity costs you dearly in hard money and honestly, just as importantly, in precious brain space.
Which brings us to Section 2, the ultimate asset class, investing in your brain.
This brings us to a really fascinating pivot. If the financial data clearly shows we need to simplify, stop the endless tinkering, and completely automate our traditional portfolios, where does all that saved time and mental energy go? Well, you should invest it in the only asset class that pays dividends forever, your own brain. Once you automate your finances, you free yourself up from the daily grind and stress of the stock market. You completely clear the cognitive deck to focus entirely on building lifelong wisdom and cognitive growth. And guys, that is where the real leverage is.
Let's just compare these assets directly. Physical and financial assets, they're fragile. They're totally subject to market volatility, unpredictable inflation, random economic downturns, and physical wear and tear. I mean, your car depreciates the very second you drive it off the lot. Your cash loses purchasing power to inflation every day. But your mental and cognitive capital, that is entirely yours. It is absolutely immune to inflation, market crashes, or any kind of external expropriation. You got to think of your skills and knowledge as the ultimate carry-on luggage. You could lose your entire bank account in a massive financial crisis, but literally nobody can confiscate your ability to code, write, analyze, or negotiate. It's 100% portable across careers and geographies, and it uniquely grows in value as you age and gain wisdom.
And you know what's incredible? Modern neuroscience actually confirms that this concept of a mental asset isn't just a fun metaphor. It is absolute biological reality. Our brains are these incredibly dynamic machines, constantly rewiring and upgrading themselves based exactly on how we invest in them. The time you save by not staring at daily stock charts can be actively redirected into physically altering the structure of your mind.
This biological upgrade happens through two just incredible mechanisms. First up is neuroplasticity, which is the brain dynamically restructuring its neural pathways in response to new experiences and new skills. Second is cognitive reserve. Through lifelong neurogenesis, an adult brain continuously creates new neurons when it's stimulated. Think of it like building a really dense, muscular buffer around your joints to prevent injury as you age. Learning literally builds neural density, creating a robust reserve that fiercely protects your mental sharpness, your adaptability, and your processing speed well into later life. You are quite literally bulletproofing your brain against decline.
Okay, moving to Section 3, the math of compounding, exponential mental growth.
Let's look at how the financial math of compound interest, the exact same math that grows a boring, simple index fund over 30 years, applies directly to our biology. Imagine the sheer power of this multiplier. By improving your knowledge by just 1% every single day, the exponential compounding effect results in you being nearly 38 times smarter and more capable by the end of a single year. Knowledge, very much like financial interest, compounds exponentially over time. Because when you learn a new concept, it automatically connects with older concepts, creating entirely new, hybrid ideas. What feels like a tiny, almost invisible daily habit of reading or practicing eventually yields a transformative, completely unstoppable cognitive advantage over time.
And over a decade or more, the gap between someone actively compounding their learning and someone with a stagnant skill set, it becomes completely insurmountable. While a static skill set decays really rapidly against inflation, shifting job markets, and of course artificial intelligence, the lifelong learner's value curves exponentially upward. The person who stopped learning the day they graduated is essentially holding on to a heavily depreciating asset, while the person who commits to daily growth builds a total monopoly on their own unique combination of skills.
Finally, Section 4, 3 pillars of mental growth. How to future-proof your career.
So how do we actually ensure we're getting on that exponential curve? Well, just like a highly optimized, perfectly balanced mutual fund, your brain requires a targeted, disciplined mix of 3 specific growth pillars. We need continuous upskilling, multidisciplinary thinking, and cognitive health. Without a solid balance of all 3, the whole system just falls apart. Let's break down each one of these mental asset allocations.
First up, we have continuous upskilling. As technological innovation accelerates, static technical knowledge decays faster today than ever before in human history. Seriously, what got you promoted just 5 years ago might be entirely obsolete today. Consistently acquiring new technical skills, languages, and modern tools ensures you are constantly building high-order problem-solving abilities. This means proactively learning to utilize the very AI tools that threaten static jobs rather than hiding from them. By upskilling continuously, you take market volatility and technological disruption and transform them into a massive personal advantage.
Pillar number 2 is multidisciplinary thinking. Look, if you only study your own narrow field, your returns are going to diminish rapidly because you're only seeing a tiny slice of the world. By studying mental models across vastly diverse disciplines, things like physics, psychology, biology, and economics, you start creating unexpected cross-domain connections. This is exactly what makes legendary investors like Charlie Munger so wildly successful. They study way outside their lanes to see the invisible connections that everyone else completely misses. Multidisciplinary thinking is what sparks those brilliant breakthrough innovations and allows you to make vastly superior strategic decisions in literally any environment. Third, and honestly, perhaps most importantly, none of this compounding happens without cognitive health. You simply cannot compound your investments if the bank is broken. This means you have to actively maintain your physical and mental machinery on a daily basis. You fuel your brain's performance through deep sleep, regular physical exercise, mindfulness, and totally dedicated focused deep work practices. In an age of constant digital distraction, endless notifications, and doom scrolling, the sheer ability to focus deeply without interruption is the ultimate competitive advantage. You have to guard your attention relentlessly because it is literally the currency you use to buy cognitive growth. To bring this explainer to a close, we can look to the wisdom of the masters. Benjamin Franklin perfectly summarized the absolute truth of our ultimate asset allocation when he said, "An investment in knowledge pays the best interest." Unlike the wild unpredictability of the stock market or the housing market, you are the absolute CEO of this specific investment. It's the one investment where the returns, the risk, and the compounding schedule are 100% entirely within your control. We've seen that the financial math is crystal clear. Simplify your financial portfolio, stop the unnecessary complexity, and automate your contributions. Reclaim your time. But the strategy for your mind is equally simple and vastly more rewarding. So the only question left for you is this. What step are you going to take to start compounding your cognitive capital today? Will you read? Will you learn? Will you practice? Go find that 1% improvement today, commit to it, and let the compounding begin.